they've said in the past that they don't want to, wait for or see inflation or the data improve in expectations. They really want to see it in the actual numbers. Well, now we're getting it in the actual numbers, and so we think while this last meeting was quiet on their end, we do think the summer meetings, especially the end of summer towards the Jackson Hole meeting in September, could be, the start of their indicating their path towards tapering. We do think they'll start with tapering of asset purchases, and then consider, the Fed funds rate, bringing it back above the zero bound. All that being said, from an investor perspective, what does this mean? Well, if we have conviction in this, inflation rising, growth rising, probably means that yields will continue to move or grind back higher. We've seen them come from 175 on the 10-year back down to 155, now moving back higher again. And in that environment where you have rising rates, yield curve steepening, you do look towards assets that are in the financial sector, for example, so banks, but other financial companies as well. You do look for yield curve plays, steepener plays, et cetera, and you do perhaps look for some inflation protection as well. Generally speaking, we do think the value rotation that we've seen in such a strong way since November of last year, we think that probably does have one more leg higher as we're getting the numbers in earnings, we're getting the numbers in the economic data, we're getting this true reopening in the summer months. But after that, we would be just a little bit cautious heading into the second half of the year. Just keep in mind, we haven't yet had one real correction in the S&P. We're up 11.5%. We don't expect that to annualize from here. So we do expect some volatility and sideways movements at some point, perhaps in the months ahead.